Hey guys, welcome back. In the past couple of weeks, we've seen so many concerns coming out of US consumers about the fact that everything's becoming more expensive, about the fact that they are genuinely and brutally worried about the way that the economy is going. And now we're seeing consumers cut back on spending, consumers changing their shopping behaviour for a number of reasons. A main one being they simply can't afford things anymore, especially if these tariff prices continue. Nearly 48% of consumers say they're going to look for sales and coupons, followed by delaying purchases until prices stabilise, buying fewer imported goods, and also stocking up on items pre-tariff prices. Also, a large proportion saying that they're switching to US-made alternatives. Now, obviously, I think the latter point there is perhaps the intention of the tariffs, but we're seeing these trends in a lot of different markets and a lot of different industries. We're also seeing consumers basically move towards frozen pizza. And that might not sound significant, but that's something similar to what happened in 2009. So again, during 2009 and the 2020 pandemic, we have seen sales, particularly of frozen pizza, increase significantly. Why does this matter, and what does this signal? Well, you guys already know what happened in 2009, the Great Economic Recession, and then we saw in 2020 similar, if not perhaps in some ways worse, economic uncertainty for a short period of time. So, is it any surprise that given the reality of the situation, again, perhaps not what the media is reporting on, perhaps not all of that sort of stuff, the fact that we are seeing, a trend where, yeah, on paper, the economy's been going well for a long time, but we all know what's really happening when we go to the supermarkets, when we go to the grocery stores, when we go shopping, we all know what the reality is. So is it any surprise that now the biting point, especially when you add in these tariffs, when you add in decreases in business spending, is it any surprise that consumers are having to make changes? Anyway, that brings us on to today's main subject, as we are seeing analysts predicting a recession which is coming, despite the financial crisis being quote-unquote put on hold. Now, what that refers to is the pause in the tariffs, right? The massive tariffs, well, they're being paused by 90 days. So this is on all countries except from China, and whilst many view it as a positive, some believe that we're still not out of the woods. And personally, I'm not an expert, but I would be inclined to agree. This idea that people are going to think, governments are going to think, oh, yeah, well, we'll just trust the US again, is questionable at the very least, right? It implies that countries and businesses will bend to the will of Trump, and we just don't really think that's going to happen to the extent he thinks it will. Anyway, so we are seeing a CNBC commentator and the CEO of Ritz-Holt Wealth Management saying in a recent segment that he doesn't see a rebound as a healthy pullback, and pointed to some classic bear market signs. The analyst called this rebound that we've seen recently a bear market bounce, and Brown talked about rebounds in the past recessionary periods to prove his point. So he saw the tables, he saw the graphs and the charts. What didn't necessarily accompany that commentary? What it was in the context which we've seen of the 9 days, the 9 best days of all time. And that's what we hear all the time, right? Every time the stock market goes up massively, the reality is typically they all take place in years like 1933, 2008, and 1931. They all happen when the market is in a 75% drawdown, a 48% drop in October of 2008. It was the 6th best day ever. We had a huge 11% run when we were already down 35% from the high. And I really agree with that point, right? This idea that, oh, well, the markets are rebounding stronger than ever, that's what we are hearing from Trump. And of course, there is a little bit of truth to this. At the same time, look at how much we're down to begin with, right? We're down essentially double digits on most stocks. Index is down significantly too since, January, February. So is it any surprise that we're seeing these little bounces? Whilst it is exhilarating and remarkable and a lot of fun, with a lot of backslapping of a lot of rich kids really proud of themselves because they grew up insulated from the consequences of their own action, today is, oh, wait a minute, maybe we put the financial crisis on hold, but we still get to have a recession. The analyst says he is not short in the market and avoids being too negative, but wants to present an accurate picture. And I think that's fair. I actually do think that's fair enough. I mean, you don't need to be an expert, but look back over the past periods, right? Look back at this trend. First things first, we're at all-time highs in the market since 2020, when in reality, a lot of things have gotten a lot more difficult for people since that period. Bear in mind, from these lows in 2020 to the absolute highs of this year, you have basically held over 100% gain, and even up to now, still over 110%. The question is, are we going to see things continue to come back down to reality? I'll give you, for example, yesterday, quite a strong gain on the S&P. 2.5% is a big gain, and we can look at that as a positive, but look at the further volatility. The other day, the day before, we were down like 3%. The broad trend is down, and the question is this a rebound, or is it just part of the continued downtrend? Let me know what you think in the comments, guys. Thank you, I hope I'll see you soon.